Mark, over to you.
Just wait. Good morning, everybody. My name is Mark Crothall. I'm the Chief Executive of the Scottish Tourism Alliance. Delighted that we are hosting this second hotel partner webinar with industry. The last time it was just Robert and myself, but you will be introduced shortly by Robert to the remaining cast of today's session and hear less from me and more from the experts in the room. But we're expecting something in the region of 60 to 70 at least joining, but keep conscious that those of you who've come on early, I think we'll crack on and let the conversation flow. I'm going to hand over to Robert, who will introduce fellow industry colleagues, and I will be dipping in and out of the conversation throughout the morning. I would say as well, and I'll put it in the chat for later, that we have our AGM and autumn seminar on the 2nd of October in Glasgow. For those of you that haven't registered and like to attend, it's still possible. And we'll be revealing our manifesto for the Holyrood elections, which of course are taking place in May next year, and plenty in that for hopefully all of you on the call to get behind as well. So on that note, I'm delighted to hand over to Robert, and I look forward to speaking and contributing later. Robert, Williams.
Thank you, Mark, and good morning and welcome to this STA webinar discussing driving success in Scotland's hospitality and accommodation sector. My name is Robert Holland and I'm the Managing Director of Hotel Partner Revenue Management. Founded in 2006, we now work with over 500 hotels across 170 different markets in Europe. We've been active in Scotland since 2018 when we started with our first hotel in Aberdeen. It's my great pleasure to introduce you to my fellow panelists today, Andrew, Neil and David. Andrew, perhaps you can start us off.
Will do, Robert. Thank you. So my name's Andrew Renouf. I have a small consultancy firm, AR Hospitality Consultancy, based in Glasgow. Following many years operational experience in hospitality and more recently in consulting for large property advisory firm. So we provide market and feasibility studies across a range of development, acquisition and repositioning projects in the hospitality, largely accommodation sector in Scotland and the rest of the UK. So in recent years, I've worked on projects in all the cities in Scotland, as well as some smaller towns and more rural locations, from limited service hotels, self-catering accommodation, all the way through to luxury golf and spa resorts. So I have obviously a great deal of sort of visibility of the accommodation sector and Scottish tourism and the impact one has on the other. And I just wanted to sort of start off by highlighting some trends in the tourism sector. I mean, generally, Scottish tourism is in pretty good shape. It has a very diverse offer, obviously tapping into major global travel trends driven by factors such as bucket list travel, migration away from hot weather destinations, outdoor and wellness offer, ancestral links, heritage, golf, whiskey, etc., etc. So very diverse offer, well established and continuing to sort of change with the times. However, it's worth noting that domestic tourism nights in 2024 were still about 35% below the levels of 2019. And international tourism, which to a large degree had plugged that gap up until 2023, declined in terms of volume of nights in 2024. Despite a 10% increase in visits, there were fewer nights, which means obviously that international tourists in 2024 were staying for shorter periods than they had been previously. I think essentially these trends, decline in domestic tourism, and then sort of stagnation of international tourism 2024 are driven by two main factors. Firstly, a cost of living crisis and therefore lower disposable incomes, but also more recently geopolitical factors leading to sort of general uncertainty and unease impacting global travel, not just Scottish tourism. 2025 year to date, or first half of 2025, there has been a slight increase in domestic visitor nights, which is and spend, which is obviously positive. And then when you look at airport stats, notably Edinburgh Airport, that's continued to grow and increase passenger numbers consistently, and at the end of June was 6.4% higher than 2024. So that's all positive for the trends in 2025, and it remains to be seen what the impact is. And Neil's going to obviously talk about hotel performance, but I think ultimately what we're starting to see, or perhaps not starting to see, what we're seeing is a two-tier tourism market. On the one hand, some very busy parts of Scotland that are driving very affluent tourism: Edinburgh, Inverness, the Highlands, St Andrews continue to perform extremely well, whereas the rest of Scotland, or much of the rest of Scotland, either stagnating or seeing some declines over the last 12 or 18 months. And I think that with the general situation, as those two factors, cost of living and geopolitical factors, that seems likely to continue certainly for the short term. And of course, what we're also seeing is very high accommodation prices in those honeypot destinations, as outlined, which of course is having an impact on other spend in other parts of the economy, such as restaurants, events, and outdoor and visitor attractions. So that is sort of a wrap on the tourism sector as I see it at the moment. And obviously Neil's going to take us through in a little while what that means in terms of the visitor accommodation sector and performance.
Thank you, Andrew. I mean, we'll pick up on a number of the things that you've commented on there later in our call, but Mark has asked me just to remind everybody that this webinar is being recorded and will be available for download later on the STA website. Maybe moving across to David now. David, as a hotelier, perhaps talk about your own company's experiences more personally. You're still muted, David.
Just testing.
Test away.
Thank you very much, Robert. I'll be quite brief, because I know there's a lot that I think that everybody would like to sort of consider. I don't want it to be a story all about what we do, but I'm CEO of a company called Resident Hotels. We are an operator of two brands. We have two brands in Scotland. We have one which used to be called Sleepers, which people in Edinburgh will be familiar with as being city rooms, and is now 4 Points Flexed by Sheraton, as is in Dundee, 4 Points Flexed by Sheraton, which was known as Sleepers. And in November last year, after a little bit of a delay, we opened the Resident Edinburgh and Drumshoot Gardens. So we have three trading hotels, which I suppose we are an operator, but we also design and create and develop as well, along with our partners who are a family office who own the business, and we've been growing steadily. So my perspective, just to sort of start off from our most recent experiences, it's been a little bit tougher, but not woefully so. We've had, obviously, bringing a new hotel into Edinburgh is obviously opening up in a market that an awful lot of people would like to open up and trade in, and it is a very strong hotel market, the strongest outside of London. So we're very pleased about how that's gone, and we focus very much within the Resident as an upper upscale positioning, the reputation, essentially, of our teams and the hotel, which is great when you get that kind of recognition and that resonates. Also within in Edinburgh, we have 4 Points like Sheraton, which is sitting in Shanwick Place. That hotel's done very, very well. It's been a busy season for them and has gone through a really challenging conversion. So we've had recent experience of capital projects in effectively semi-new build or substantive redevelopment, as well as repositioning through extensive refurbishment. And up in Dundee, which of course is the sunniest city in the whole of the UK, looking over the Silvery Tay, great spectacular location, close to the V&A. So lots of very good reasons to go and visit the city, which has got a very interesting economy and kind of growth around it. But I suppose as an operator, one tends to be on the more optimistic side and tries to see through things. Now, I'm not sure if that'll be a theme that will come up, but in terms of challenges, there are lots of challenges, but equally, I think there's also lots of opportunity for growth. And I think as a sector, I don't really call ourselves an industry, I call ourselves a sector full of professionals. You expect professionals to have good routes through to getting across the potential for growth, the potential for careers in our sector. And so essentially recognizing challenges, and when you get to my age, you've been through a few challenges. So, you know, it's the thing about this, the time to really look to where the opportunities are, not just where all the pitfalls are.
Thank you, David. I had the pleasure of staying at your hotel in Edinburgh in February, and very pleasant it was too. Neil, over to you. I mean, please do share, I mean, hot stats and your wider look at the hotel market in Scotland. And I believe that you've got some slides that you're going to share with us as well.
Yeah, Robert, thank you so much. Yes, I've got some data. Just to give you some background, as Robert alluded to, I work for a company called Hot Stats. We are a benchmarking company for hotels. We're based in the UK. What we do, we take profit and loss nominal data, and we present that as a series of KPIs on our platform. And we very much drill down right down to GOP level, which I'm going to share with you just now. So just bear with me and I'll share my screen. And hopefully the power of technology, you'll see that.
Yep, thank you, Neil.
Perfect. Right. So basically, I'm going to look at first of all the asset class performance in the various different sectors, the segments. So here, just to let you know, this is based on a 12-month rolling average, monthly average, as we get new data in from our hotel contributors. So in the orange will be all hotels in Scotland. Our current database is about just underneath 100 hotels, made up of big brands and some independents as well. And the blue trend line will show you that particular segment. So here on the luxury segment, as you can see, from 2021, it's kind of underperforming in terms of GOP compared to all hotels in Scotland, which is quite surprising when I seen the data. And if we look at the full service segment, we can see it's following the same kind of trend lines as all hotels in Scotland. However, once we get down to the service sector, so that would be the economy select service hotels, that's where the opportunities lie in GOP. It's actually outperforming the rest of all hotels in Scotland. Right. So, moving on. This is average rate. So yeah, again, looking at the luxury segment, we can see, yeah, of course, we would expect to see average rate in the luxury segment to be outperforming and be substantially higher than the other hotel classes in Scotland. It kind of peaked just as we were coming out of COVID, but then it's kind of flatlined over the past few months. Yeah, again, we're seeing some challenges in average rate for the full service segment. It is underperforming against the whole of Scotland, and that is replicated in the select service. So, of course, we'd probably see that. We expect that from the select service because obviously they are offering cheaper rates than both the luxury and the full service segments. One KPI I did particularly look at is our labour costs or payroll, because obviously it's been the increase in the employer national insurance contributions, and of course we have the increases in the living wage just recently brought in kind of March, April time. Yeah, again, blue segment lines will be the luxury compared to all hotels, and we can see that the luxury segment is facing significantly higher labour costs. Okay, so obviously there's a big explosion, obviously, as we came out of COVID, and that has steadily declined, but then it's kind of flatlined and remained steady. Not huge dips, roughly when the national insurance employers contribution and the living wage came in, it's been steady. Again, service economy is probably the one that's doing the best. Oh, sorry. I'll just go back one. There you go. And that is probably due to the business model of that particular segment. Of course, there's not as many staff to serve these hotels. And in terms of the full service segment, it's basically running the same as all hotels in Scotland. Okay. Moving on, talking about total cost of sales, or what's this costing you to deliver that revenue into your hotels. We can see here, again, cost of sales in the luxury segment considerably higher. Okay, but both all hotels in that particular segment coming down slightly, as we see as a trend line, but nothing really to write home about. Again, biggest difference is this select service and economy. Okay, that's where the real total cost of sales have been declining. Again, down to the business model, maybe the increased use of technology as well, which I know we're going to talk about. And yet again, full service, it's still bobbling along there, slightly more expensive to deliver revenue to these hotels compared to Scotland as a whole. And as we move, the last couple of months, it's gone up slightly. Okay, so the difference between all hotels and full service is getting larger. It'll be interesting to see how that trend continues. So what about the big two? Let's focus on Edinburgh and Glasgow. This is GOP per available room as well. And all Scotland hotels in the orange, and the Edinburgh will be in the blue segment. So, as probably could be expected, GOP definitely better in Edinburgh compared to the rest of hotels. That's to be expected, considering Edinburgh is a particular unique market, and I think it alludes to what maybe Andrew was saying, and the demand coming into Edinburgh Airport. Okay, and of course you've got all the wonderful August festivals. All right. If we turn our attention to Glasgow, the picture is just not as quite as bright. Okay, it is bobbling along underneath the whole of Scotland as a whole. So I looked into where that was coming from, and I've listed those reasons here. So it's lots of to do with room expenses, cleaning supplies, linen, laundry and dry cleaning, uniform costs. It's all contributing to why that GOP figure is not higher in Glasgow. And yeah, again, payroll as well. Salaries and wages been a bit of a challenge, and it's having that end result is GOP is down in Glasgow. Okay, so
Neil,
yeah.
thank you for sharing that. Maybe taking, I love a statistic. Taking what you've said, Andrew, is this a picture that's being played out in the development of hotels in Scotland? Are you seeing a similar picture about the pipeline of hotels across Scotland?
The pipeline of new hotels in Scotland is very subdued at the moment, Robert. A number of the pipeline projects that were planned and funded up to COVID have now been delivered. The majority of them have been delivered. So if you look at Glasgow, for example, 2,000 plus new rooms since 2020 have opened. The active pipeline of further projects in Glasgow is relatively small. If you looked at the planning portal, there are a lot of hotel projects in planning, but the actual active pipeline is relatively small, and that's replicated across the country, including in Edinburgh. But Edinburgh's probably, for different reasons, probably more to do with available land in the city centre. But the issue is that it's incredibly difficult at the moment to fund a hotel development, with often the end value, particularly on day one, being lower than the cost to deliver the development. So unless you have a very long-term hold strategy, investment strategy, it doesn't generally make sense, and it's difficult to borrow the amount of money you might need. And of course, finance costs have also increased. So there's a number of factors that are making it difficult to deliver new hotels now across Scotland, despite the fact that, I think what I'm seeing from Neil's slides here is that GOP margins are, pretty much back to where they were in 2019, despite the payroll cost increases, NI increase, energy costs, other cost inflation that's, prevalent and has impacted the sector for a number of years. Despite that, it's still difficult to deliver a development, and that's ultimately because of construction and finance costs.
You talked earlier about a two-tier of hospitality in Scotland, and about the expansion of Edinburgh Airport. Is that not going to benefit more than just Edinburgh as we see that? And I mean, there is interest from overseas markets in acquiring properties in Scotland as well. Will we not see further investment in Scotland from the overseas market?
Yes, in the right location, and that comes down to, ultimately, it's down to the performance of that hotel, micro hotel market, as to whether that's an attractive investment. So it goes back to Edinburgh is very attractive, as David was alluding to. The Highlands, Inverness, St Andrews, Glasgow to an extent, more because of its events and commercial market. But other than that, obviously, Mile Hall, just on the outskirts of Glasgow, transacted relatively recently, as have other sort of, let's call them very high-end resort hotels around Scotland. But it's very specific. I think that there isn't a great investment market for other parts of Scotland, unfortunately, at the moment.
Is there not also a challenge with planning permission for new build properties outside of those main cities? David, I mean, have you guys got appetite for further growth in Scotland? You're testing me again, David.
I think that we are, whilst we have two brands with two positions, mid-scale and upper upscale, we are resolutely an urban creature in terms of bringing operational expertise. So whilst on a family basis or family connected basis, I'm very familiar with lots and lots of hotels all over the country. In a professional basis or a business basis, we are really focused very heavily on the cities, and probably on the main cities, particularly for the 4 Points Flex by Sheraton positioning, which I think some of the commentary around GOP plays into that, but I think also there are opportunities in that part of the market for mid-scale being refreshed, and I think that's quite interesting, providing accessibility as well as employment. In terms of the resident, really, we're obviously learning a lot. Whilst I'm from Edinburgh originally, we're learning a lot about trading in Edinburgh, and I feel very strongly that despite any number of headwinds, the city's potential was understood in 1774 and it's understood in 2025. So we are but passing through something which is as important to the country. I mean, I think Andrew's mentioned the airport. I personally think the success of the airport has been brilliant for the whole country. Obviously, in the same sort of way that London is the gateway for the rest of the UK, so Edinburgh can be the gateway for the rest of Scotland. But I think that, from our part, being part of a collection of extremely good, well-invested properties in Edinburgh is an important part of our mission for the resident.
I mean, Neil, not one.
Robert, sorry, can I just go back? Sorry, just on the point about Edinburgh Airport, because I didn't really answer that question. David has more than I did, but you're right. Edinburgh Airport is the main gateway for international visitors to Scotland, either direct or through through London airports. And the Visit Scotland Visitor Survey 2023 highlighted the fact that the majority of people, particularly international visitors who are going to Edinburgh, aren't just going to Edinburgh. They're going to elsewhere in Scotland as well. And they'll stay in Edinburgh for, 1, 2, 3 nights, but generally part of a longer break. So there are definitely opportunities, and, that is being fulfilled where people are staying elsewhere, and it's helping the Scottish tourism sector as a whole, the success of that airport, which incidentally is it's around about 15 million passengers at the moment annually, and has the objective of growing to 20 million passengers over the next 5 years. So it's a real driver of the success of both the accommodation sector and tourism generally.
Andrew, you obviously mentioned earlier that the length of stay in 2025 is ahead of where it was in 2024. So that's indicative of the fact that people
it's in 2024 was lower, was shorter than.
So it's growing as a length of stay than 2023.
Yeah. Whereas although domestic nights in 2025 so far have exceeded 2024, but the number of visits haven't. So that has extended. Yeah, domestic has.
Has extended.
Yeah.
Neil, the numbers that you've shared with us, and I'm putting you on the spot slightly here, but how do they compare with cities south of the border? I mean, is it an attractive investment to come into Scotland?
Yes and no. The no being obviously London and the greater south region is obviously outperforming Scotland the last time I looked. However, the English regions, the provisional hotels, are struggling, and Scotland is outperforming them as a whole. So
bodes well from external investment.
so it's like probably like Edinburgh. Edinburgh is the draw, and London is the draw. But then, as you begin to expand into the regions, the picture is not so great.
Mark, you mentioned that the Scottish government is also looking to increase the productivity of Edinburgh's of airports outside of Edinburgh, Glasgow in particular. Can you give us a bit more context on that?
Yeah, thanks, Robert. No, it's not necessarily the Scottish government. It's very much the industry focus is to actually spread the visitor across Scotland more broadly. There's a lot of capacity still in Glasgow. We need to have more route development going into the city. Edinburgh obviously is nearly touching 16 million, as Andrew had said, and probably surpass that actually by the end of the year. And yes, you know, Edinburgh, everybody will always go to Edinburgh, but how do we actually spread that footfall across the country? And to the point earlier around Glasgow perhaps underperforming slightly against the rest, and obviously how do we get people down to Ayrshire, up the west coast into the Highlands? There is a very clear, direct call to invest in route development in Glasgow. £350 million being invested in the airport under its new ownership. So important that you know, we can still have routes from the US coming in. And I guess looking across to Dublin, where you've got Dublin Airport at capacity already, it does actually open up an awful lot of opportunity for Glasgow too. So it's the government and the potential new, all parties are well aware of that sort of call to action, and I think there'll be a big push from Glasgow as well, rightly so, so we can get that pound spread. Just again, I just put in the chat there around the international piece as well. We are very definitely seeing a drift now of international visitor stays shortening. However, on the positive is that their spend is increasing significantly, and absolutely right on the domestic front, shrinking, and that's how we need to address the balance. Unfortunately, there's not enough extra international monies coming in to compensate for the drop off of the visitor spend. But by comparison to the rest of the UK, the IPS numbers that came out only last couple of weeks ago, Scotland had a 26% growth on 2019 in terms of international footfall, whereas south of the border, I think it was minus 1%. And obviously the visitor spend that comes with that is very welcome. So we punch well in the international space, but there is definitely more capacity to be had through both east and west central belt airports. And of course, we mustn't forget Aberdeen or even Inverness as well.
Well, that kind of segues nicely into a rather passionate conversation around the tourism levy, and whilst it's not new to other European cities, David, let's start with you and with a presence in Edinburgh. How might the upcoming 5% levy on overnight accommodation impact hotel profitability and tourist demand? Will guests choose to stay maybe outside of Edinburgh?
Look, I think it's a very I mean, there's been a long debate, and then there's been a democratic decision. I think it's undeniable that shoulders are being looked across all sectors to find where burden can be carried. But aside from that, I think it's quite important to respond to these things in a way that government increasingly understand as being credible. I think if you constantly have a super negative approach, to how governments wrestle with problems, and just say it's not good, because you could just say, well, look, 5% extra is not good. And whilst I'm not hugely happy with the level of it, I think I understand what the problem is, or part of the problem is. And I think, like anybody in a city, you want to see that city thrive overall, and you want to see all communities within that city thrive. And if the city has got a huge amount of visitation from the rest of the world, then some of that I can understand that. But I think in the other extent, and maybe this is where Mark has been very proactive in his advocacy of the sector, is that actually we should be about a growth story, and we should be understood as being flexible, capable of speeding up growth, that investment can quickly provide broader returns. And so just being regarded as a potential taxable thing, because there's a golden goose kind of idea, is a very short-term approach to something actually where the tourism sector has got immense potential for growth. And I kind of feel it's obviously a very difficult message to sort of try to push back maybe against tax burdens, because they're the obvious things that hit everybody. And we can see some of the impacts perhaps being played out in real time right now. But you also have to be able to give the governments something of a well, actually, we have got part of the solution here. It's not just about complaining. And it's a complicated message. Overall, I think this debate is not purely in Edinburgh or Scotland. This debate is all across, and if you look at comparative studies across, there's different approaches. There's more nominal approaches. There's some that share the percentage approach. I personally think Aberdeen's on a bit of an outlier as to what it's thinking about. But reality is that these are very active debates across the whole of Europe. So I'm not necessarily going to be absolutely kind of crystal clear in the answer, because I think we haven't seen what happens. And when, we have got a high burden of VAT, we've got high burdens on employers' contribution to national insurance, and we all have aspirations to make sure our teams are really well rewarded. And I would like to see all of those things being kind of directed to more of a growth agenda, which I think which is actually kind of deliverable. So I'm very, very aware that we're about to have budgets north and south of the border. I sincerely hope there's lots of good advice going into those final considerations. The one thing that we can say, I think, is that people, whether it's the UK or Scotland specifically, they really want to come. So we ought to be very cautious about making it harder for them to make that decision positively to come. And if you take the kind of Robin Hood example, people still went through Sherwood Forest, if you like, and they wouldn't have if it was too difficult. So I think there's a kind of, it's a bit of a trivial kind of way of characterizing it, but I think there is a level of truth. And if we can turn things more to investing, say, for example, North Coast 500. I mean, I know Tongue and Betty Hill and Lairg and all these places really, really well. I used to drive around those roads on my own. And they're busy, and so then, oh well, what do we do about this? And actually the answer is, well, the rest of the world wants to visit this, we need to sort the infrastructure out. And so these kind of things I kind of see there's a chance to grasp what actually, way before my time, would you believe, in 1969 the Tourism Act looked at how it positively could look at tourism properly as a growth sector, as opposed to something that can just be plucked overplucked, perhaps.
I was in Salzburg over the weekend in Austria, and interestingly there they do charge an accommodation levy, but then included in your stay is use of public transport throughout the time that you're there. And so there are ways that maybe we can learn from these European cities to see how that levy is not just seen as an additional tax, that there is a way of encouraging people to utilize maybe discounted entry to museums or other ways of encouraging people to see a value out of that levy rather than just a cost burden to hotels? Mark, I mean, you're more aware of some of the conversations that are going on elsewhere in Scotland?
Yeah, I mean, obviously, David makes a very good point. I guess from our positioning, we've always, when the levy was going to, the bill was going to get voted through, we thought, okay, well, how can we make it put our case forward to make sure that it works in a positive way for the visitor and enhances the proposition of the visitor. And obviously, importantly, with that is how do you signal to the visitor where their money is going and how it is actually benefiting them. And I think, your example just given there around free transport or whatever, all of that is at the gift of the authority themselves to decide on how and when they want to and where they would like to spend the money. From an Edinburgh point of view, anybody who books a room for a stay in July 24th onwards, as of the 1st of October, will be subject to paying the levy as well. So, and the guidance for business will be published in the next couple of days. We've just refined all of the questions, etc., with colleagues at Visit Scotland. But across the rest of the country, the Glasgow have voted for 5%. They're due to go live on the January 27. Aberdeen, April 27, 7% is an odd number. Obviously, it's more it's more psychological, I think. 7% of a low rate is obviously, not a lot. Argyll, interestingly, have just concluded their they go to vote. The council go to vote on after the consultation on whether to introduce it. And looking at the numbers of against, you've got 83% of the you've got 65% of the residents of Argyll are actually against the levy, 90% of business, and even 83% of the visitors are against it. So it begs the question as to whether or not the authority would actually choose to progress with the levy or not when you've got that anti-agenda. In the Highlands, they've actually paused their positioning to the council. They've commissioned a much more deep economic impact study, and they will go to the Chamber, Highland Council, in December. But just reverting back to the session I gave at the Economy Committee, in all cases, the absolute necessity is to do this economic impact assessment of what that tipping point might be, or what that elevated rate might do to the visitor demand, and actually how it might displace spend in other areas of the visitor economy. And when questioned by the committee last week, the leader, the chief executive of the City of Edinburgh Council, Paul Lawrence, was asked that very question: has a study been done on a tipping point of rate in Edinburgh? And do you think they'll still come? And obviously the growth in visitor numbers to Edinburgh, the growth in hotel rates, his response was saying, well, they've managed to they still come even at higher rate. But in the domestic sense, none of that measurement or assessment has been done. So obviously that 3-year period of evaluation as to what it might deliver is something that's going to be really important for other authorities to see. Perth are consulting, Fife are consulting, Dumfries and Galloway are consulting, and I guess pretty much every authority that have got a reasonable set of stock will be doing so. And we also now wonder as to whether or not they're doing that purely because they have concerns around a future settlement by Scottish Government into their actual allocation will be compromised if they don't pursue alternative tax raising powers, given that that was the ask of the local authorities through the Butte House Agreement initially. So, but logic would say that certainly many can't sustain it, and we're still obviously stuck with a percentage as opposed to a fixed fee approach. But we'll continue to argue the case for a fixed fee alternative as being much more practical, not least, and less costly to business as well.
So maybe Falkirk and Perth should announce that they're not going to introduce a visitor levy for the next 20 years and encourage developers to develop hotels there instead. Yeah. Well, Andrew, is that likely to happen? I don't know. Are we seeing development outside of Edinburgh in advance of the levy?
No. But I mean, I have a view on this, Robert, which, well, firstly, I think that the broadest shoulders are bound to be able to take this better than many other parts. But it's also worth going back to Paul Lawrence's response to Mark's or somebody's question in Edinburgh, average room rates so far this year. Apologies, Neil, I get my data from another source other than yours, but the average room rates in Edinburgh in what would that be, July year to date, have declined year on year. So, let's not say the bubble has burst, but top line trading is a lot more difficult this year. And Edinburgh is one of the strong markets, of course. And you can see, in other markets where average room rates are actually declining this year. So to add 5 or 7% on top of those room rates is not going to be helpful, and that's a timing issue more than anything else, I think. But going back to your point, Robert, on different parts of Scotland, I think ultimately the legislative framework is in place, and I think ultimately you'll see this levy being applied across Scotland in every local authority area, because why wouldn't you if you've got that framework in place? Ultimately, no matter what the consultation tells you, I just think it'll end up happening eventually everywhere.
Thank you. Lynn Murchie, thank you for your question. With regard to international visitors to Scotland, has geopolitical tensions impacted US visitor numbers this year? Are there any forecast changes for 2026? Gentlemen, have you got anything that you could add about that?
I don't know the numbers specifically, but what I would say is that a lot of the growth in the Edinburgh airport is due to additional North American routes opening up. So I suspect that there probably hasn't been an impact overall. I think, if you look at because there are new routes, I think if you had the same number of routes, then the passenger numbers might have declined per route, as it were. But there are more routes, so it's but I think certainly it's there's definitely a sort of a tension, I think, and a and a sort of inflection point where naturally a lot of people, not just in the US but across the world, are probably less likely to travel than they would have been a couple of years ago.
Mark, you have something to add?
Yeah, I mean, my chair is Rebecca Brooks, obviously Abbey UK MD, chair of UK Inbound as well. Rebecca's done obviously lots of work in getting the groups business coming over from the US, and she came back from the East Coast and was very confident that there was still a lot of demand. The intrigue of Edinburgh and Scotland is very definitely there. So, and obviously with golf and things being a major draw as well. So I think we have to be confident, but we can't put all our eggs in one basket. I guess the response to the Canadian opportunity is something that we've seen over the summer as well, with the new routes coming in from Vancouver too. But going back to what was said earlier, Edinburgh is still a very popular and high demand destination, and that market will attract in. And although we don't have golf championship of the scale that we had last year, there will still be other reasons to visit, and we just have to keep pressing hard, and the marketing activity that Visit Scotland will continue to do in the US will be just as strong as it has been in previous years, if not more.
Thank you.
Just adding to that, actually, we've seen, obviously we've opened a hotel, so it's our first year, and we've been, very busy, and maybe the geographies are slightly different this year to what will be in future, but we've seen very significant contribution from the Middle East.
The rise of the coldcation, apparently, people coming to get out of London as global warming warms it up.
May not be London, but certainly the coach sales are quite healthy, even when it's 24 degrees.
I read this morning a Caterer article. The ONS is forecasting now 111,000 job losses in hospitality by the time of the next budget, with 84,000 already since last November. How can we continue to attract that next generation of hoteliers into our industry, and in what ways are these ongoing skill shortages that we have across Scotland affecting our competitiveness as a tourist destination? Mark, would you like to perhaps touch on that?
Yeah, really, really good question. And something we discussed this morning with Alex Hamilton, along with myself and Leon Thompson. Obviously, the numbers are horrific. The hospitality sector accounting for more than half of the total job losses in the UK since the ENIX impacts have come about. Certainly, the initiatives that are being led in Scotland by industry through HIT Scotland, Hospitality Apprenticeship Scotland, we have a skills group working closely with the colleges as well, is really key. I did a piece in the Herald to align with the announcement of the school results, the annual results, just repositioning or making sure that they see our industry as a career of choice, and it's not necessarily just the traditional roles that are automatically seen within the sector as ones that they can do, but it's a pathway. We need there's opportunities in AI. We need upskilling in AI, again, something we spoke about this morning, but equally ensuring that the colleges and that network of apprenticeship programs exist to enable those young people, and not necessarily young people, but those who are wanting to reskill and come into the sector can do so. So a big part of I think we're 245,000 employees in Scotland now in the industry. In fact, we're the largest employer in the sector, in the economy as a whole, overtaking finance and retail. And I guess that message going back into the influences of the younger generation of saying, look, how would you like to come and work for a company that turns over £17 billion a year, which is the total tourism and event spend? That sounds quite a nice proposition. So it's how we pitch the opportunity and to persuade others to do it. But we need 45,000 more people working in this sector either way by the end of the next 5 years. And obviously it's important that the visitor levy and the apprentice levy, etc., works in Scotland in a favourable way, and obviously businesses can have that capacity in their P&L to be able to invest in their existing teams and grow the future talent.
But picking up on that need for 45,000 people, Mark, I mean, there are options available today with the use of technology, outsourced specialisms such as ourselves at Hotel Partner doing revenue management, or other companies offering marketing support. Can you see a further growth in that impact of technology moving forwards?
100%. I think, I would see, you're working in the industry, so these career opportunities that sit in the circular economy of our sector in terms of the job economy, I think are really important, and technology has a massive part to play. I think AI, in terms of upskilling an industry into how to take advantage of AI, is going to be critical, not least around the destination marketing aspect of it. And we at risk of perhaps AI, presenting Scotland in not the best way we would want to see it. But freeing up capacity to have frontline hospitality and the conversations and the storytelling, and taking people away from the more, let's say, mundane roles, and we were seeing it in finance and everything else of how it works favorably, is only going to be a good thing, because hospitality is about conversation and human interaction. So that's key, and it's one of the big USPs of the industry. I think it is.
I mentioned to a couple of my colleagues when I was speaking to them last week that I spent a couple of weeks in the French Alps over the summer with my family, and they've invested heavily in attracting an audience to what was traditionally very much a winter destination. Do we see any evidence that such investment is going to happen into Scotland to maybe make Scotland more of a year-round destination? Would that support growth and investment in tourism? Andrew?
Yeah. Well, I think that Scotland is a good year-round destination already. That doesn't necessarily mean that as many people come in the winter as they do in the summer, but I think anywhere is going to have that sort of seasonal peaks and troughs. But I think Scotland does very well as a year-round destination, promoting itself as a year-round destination because of the the events program, the types of activities, the cultural aspect, you know, the whiskey, the golf, etc., is all year-round stuff. And I don't think that clearly there's always more that can be done, and promotionally wise, I think Visit Scotland, you know, do a pretty good job of it being a year-round destination. If you take somewhere like Loch Arbor, Fort William, for example, it is 100% a year-round destination with skiing in the winter, mountain biking all year round, hiking all year round, and then, you know, summer sightseeing, sort of less, perhaps more gentle exercise tourism the rest of the year. So, yeah, I think it's, you know, there's always more that can be done. But
and Mark, you're clearly an advocate of global climate change.
Yeah, I think obviously what we're seeing in the Mediterranean, certainly, you know, the hot weather we touch, I call it coolcation, you know, the cool destination. You know, we'll see perhaps some behavioural change of when people choose to holiday, the times of year, and we could see more coming in the winter and the spring times as well, and autumn. You know, the challenge as well is that a lot of the smaller independent operators trade up to the threshold of £90,000 out of that threshold, and then they'll shut their door and obviously not make themselves available in certain parts of the country when there is opportunity, and that's very clear. Andrew's said that. So, but a lot of course, of our off-season, as it's known at the moment, visitor is the domestic audience. And again, it's that affordability and that confidence in being able to want to travel and spend money in those destinations. So at a destination level, everybody has to work in a much more cohesive way to be available, stay open, and see the opportunity of, you know, the dark sky tourism opportunities, as much as you know, being able to enjoy the outdoors in different ways. We've got the likes of you know, the Enchanted Forest festivals going on at Pitlochry in October through to November, so reasons to visit in those cooler months. And Frida Newton, you know, is a great example of somebody that owns Jacobite Cruises on Loch Ness and has been trading year round for many years and doesn't see you know, a closed season. So, but it's about making, as I say, product available, but you have to work in a coordinated way, and supporting that. The infrastructure also needs to be there to allow people to get to and from those destinations in a safe way as well, and timetables need to work too.
Perhaps we could seed the clouds around Loch Lomond on a Wednesday afternoon, so that come the weekend it's going to be nice and dry. I mean, the Middle Easterns are doing it a lot already, so why not bring it to us here? Andrew, you had a comment.
Yeah, no, it was just to reinforce the point that Mark made there about sort of availability of accommodation rather than availability of the product. Inverness hotel occupancy in 2024 average reported as 83%, whereas the regional north as a whole, or rather excluding the Highland region, excluding Inverness, only 70%. So, you know, I think that tells a story where people are still coming all year round to Inverness, but perhaps not going further afield because of lack of availability of product rather than any lack of demand.
The Highland Coast 500 has been, I guess, a relatively new, or the perception is it's a relatively new idea. Is that seeing those hotels around that area now open year round, where historically they might have been a seasonal hotel?
Probably more so, yes. The problem is that there isn't enough hotel accommodation around the North Coast 500 anyway. So, you know, those hotels will be doing pretty well, I would have thought. But yeah, there is a general shortage of accommodation around that particular visitor attraction, let's call it.
And David, your family have a hotel on the west coast that's benefiting from Highland walking as well. Is that right?
Yeah, we have in the broader sort of context, but it's not just one family. I was going to make a point that I think is really quite important. I totally understand the lengthening the seasons or whatever else is very important. I get that. But one of the things that is really important is that if, for example, if you conceive of investment in remote hotels by visiting during July and August and imagining how wonderful this could be through the year, you are at risk of not really appreciating some of the fundamental challenges that happen through seasonality. And obviously, as we're getting closer to the clocks changing, we're getting more and more aware of it getting darker earlier. And it's not just that. You've got to be able to provide accommodation for people to basically move their families up there. There's got to be schools there, infrastructure. And I think, this is the thing. Of course, the accommodation may not be there. We'd love it to be there. But in reality, it's very difficult for people to bring families up there. And that's part of the kind of underpinnings. If you like, originally, these hotels were typically family run. And because the overheads could not, otherwise sustain the nature of the business. Now, having said that, I do appreciate there's been a lot of investment, and some of the hotels that I mentioned, whether it was Tongue or Betty Hill or whatever, they have seen a fair bit of investment, and so those things are great. But it's still a big challenge to be able to have people kind of available all year round viably to work, and that's why some of these hotels will operate to a largely seasonal rhythm. And it's difficult. It is not straightforward. And so in a way, obviously it's not the answer for the rural side, but I think that the stronger that the urban performance can be out of season is the greater chance of people dissipating up and then participating in these things, because the day trips from both of the big cities, particularly in the Central Belt, to Mark's point, people will go up to Loch Ness on a day trip. So getting the city centres to really thrive for longer and longer periods is part of that, I think.
Neil made some interesting comments about the profitability of select service and budget properties outside of obviously outside of the major cities. But Neil, would you be an advocate for the use of technology to further lower these costs, to make these type of stays even more profitable for hoteliers, and perhaps enable us to open hotels in remote destinations that have a self check-in, that don't require a reception team?
Well, from someone who's from our rooms division background in hotels, yes, I'm all for really cloud-based PMSs and guest-facing software and a element of self-driven management. You can do self-check-in, you can register your details online before you stay, you can book upsells, yeah, definitely. Of course, a lot of that functionality will require good broadband connectivity, and we're very lucky here in the Central Belt. We've got quite good connectivity, but not sure about as further north you get, and whether the challenges of rolling out really nice tech is feasible up there. I know there's other ways you can connect instead of satellite. Yeah, definitely, but it's not as good as broadband. I know. I rolled out a PMS system, a cloud-based system, to quite rural properties, and that was a huge challenge to us, definitely.
Lynn, lovely to see a comment from you again. And if anybody else has got anything to share with their own experiences of operating in Scotland, it would be lovely to hear from you. But I guess to enjoy wild swimming and wild saunas and yoga retreats, you don't necessarily need a full service hotel. You don't need to have the that level of luxury that requires so many people, that requires the accommodation that David mentioned earlier. There's a lot more simplistic ways of delivering a hospitality service without the requirement for that, if one has access to broadband, obviously. And I mean, David, what are your thoughts about the adoption of technology and how that could change our industry and make us more competitive moving forwards?
I think that for our sector, I think characterizing it fairly as a source of inward investment that you can't offshore, that is a professional career path that's hugely fulfilling, and basically use the technology to basically support that. I think, frankly, kind of part of a kind of, it's cheaper to do it this way, that way kind of thing. I get it, that does appeal to people of a certain leaning, but reality is it's the fulfillment that's going to drive this. And, that's harnessing things that can make teams and guests more fulfilled is a positive. Clearly, there's lots of dark threats, but I personally think, where we are with our big significant projects to modernize the tech stack behind the business is really all about making it better for the teams and the guests, and we believe that will drop into obviously economic performance, and I think the evidence is actually there for that. But as to having it as I think if it's just seen as a cost cutting thing, then it's a low barrier to entry for everybody to do the same thing.
Thank you. Neil, you had something to add?
Yeah, Rob, I'm just going back to what Mark was saying about the workforce issues that we're going to be facing. Could I ask maybe some comments whereby are we trying to encourage a domestic workforce to join hospitality, or is there something maybe to do with foreign nationals coming and be attracted to hospitality and work in Scotland? I know there was some talk whether Scottish government would get control of visas to try and encourage that. Is that all died down now, or what?
I'll jump in and answer Neil's question. Obviously, we're pushing hard for the youth mobility scheme, which will open up that opportunity for European workers. I mean, we lost 28,000 European workers at Brexit, and obviously a load more that then went post COVID. So youth mobility is probably the number one push. There are not just ourselves as a collective voice of a number of other sectors in Scotland, also still pushing the call for a Scottish visa that would allow, obviously, a much more targeted approach to be able to attract talent in. We have some real challenges. You'll be aware of, certainly as operators will be aware of the barriers to visas, both in the cost of a visa, minimum criteria of £46,000 base wages and stuff. So it doesn't become viable for many of the smaller independent operators in particular, and particularly the more seasonal ones. And the flexibility around bringing a partner as well is also pretty much non-existent. But the argument will continue to be that the industry we work in is an international industry. We need that international culture that goes through Scotland, and it's also important to have those colleagues from foreign parts working alongside our own homegrown talent as well, to allow them to grow too. So it is and will remain a continuous push. The challenge we have, of course, is what we see happening with the small boats agenda south of the border. That is obviously a dominant topic when it comes to anything to do with immigration, sitting in Westminster at the moment. But the case is made. The care sector, of course, is one there. We desperately need more people, and more generally in Scotland, we need population growth to be able to respond to the opportunities, both build the houses that David was saying around that we need in parts of the country, and obviously all of the other sectors who I sit alongside around tables. Every one of us is saying we need people, and so we're competing for a small amount of fish in a very big pond, and obviously that forces wage rates up, which are disproportionate to the reality of the role that they're filling, and actually puts further pressure on any organisations on cost to a consumer.
And I think we also, I mean, we always talk about not only the number of people that are employed in hospitality, but the number of industries that are on the outskirts of hospitality, the food and beverage industries, the transport industries and such, just how big an impact hospitality has across not just the hospitality sector, but about the wider Scottish economy.
Yeah, and absolutely, that's we talk about tourism as everyone's business, and again in our manifesto when it's released, we'll just demonstrate all of that interconnectivity through the different sectors. Whether again sitting around the meeting table this morning, the lead representative, the logistics trade body, you can't. We have to distribute. We've got insurance there. We've got renewables. I mean, we're all interconnected in one way, shape, or form, and I've said quite often that one thing when COVID hit, for all the horrifics that COVID delivered us everybody, I think there was a recognition that when tourism stopped, it impacted every household, because plumbers, joiners, florists, frontline workers, etc., and the people who actually enjoy it all felt the ripple effect of it not being able to function. So that argument again being made very clear to future governments and policymakers around, if you chop the legs off one, then there are potentially unintended consequences that will flow through into other parts of the ecosystem that ultimately won't deliver the returns and the receipts that we have the potential of delivering.
Thank you, Mark. So just mindful of the time, but maybe I can turn to each of my panelists and just ask you each for a closing remark before I go on to thank our audience. David, may I start with you?
I think this is, you can't offshore it. It's here. It's a wonderful asset. The sector, the talent, the opportunity. There's loads of headwinds. There kind of always were. The ambition that the cities, all of the cities actually in Scotland, all of them had huge ambition, and indeed in the country, there's a lot to be optimistic about, and I think that's why I hope that people like Mark continue to have a very articulate, nuanced way of communicating with government and hopefully influence policy decisions so that the opportunities from the broader sector are understood across every aspect, most particularly as it currently needs to focus on growth, and that's personal growth as well as economic growth for the country. There's a lot of very good things, despite all the challenges, and sometimes it's pretty difficult to kind of see through them.
Thank you, David. Neil?
Just on a positive note, yeah, I totally agree with, I think it was John's comment about GOP not growing. Yet it is. We see that it's not growing much. It's flatlining, but the positive is it's not decreasing. So, coming from a hotel background, I know it's a challenge about keeping control of your costs and then expanding your top line revenue, and that's you need to keep going. And happy to share some other data if people want to reach out to me, Robert, and I can share that with them. So, but keep and let's keep that GOP figures, investing in our product, investing in our people, and the whole experience, especially with international visitors.
Thank you, Neil. Andrew?
Yes. I think, you know, we've covered it. We've said we punch above our weight as a tourism industry. It seems we seem to lurch from one crisis and headwind to another over the last 5 years, but you know, we do punch above our weight. I think that we've got some incredibly popular and successful tourism destinations, and that's shown in the accommodation hotel performance data. It's very frustrating with my development and investment advisory hat on that there isn't more activity, that it hasn't picked up again to pre-COVID levels, but I'm confident it will. We just need some of those external or macro factors that we can't do a great deal about to improve. And I do think, yeah, I'm always optimistic about the sector and remain so.
Thank you. Some interesting comments in the chat from John, mentioning that our markets are overall still about the same where they were in 2019, with no significant growth, and obviously the levy is going to impact massively that GOP level as well as it comes in, and Jane mentioning about the number of trainee places in colleges decreasing, and that's going to continue to provide a challenge to hospitality recruitment. So in summary, I think Scotland can maybe look forward to continued growth and investment in this hospitality sector. But in order to navigate challenges ahead, it must invest in its people, as well as adopting new ways of working so it can remain competitive in the global market. I'd like to thank Andrew, David, Neil for participating today, for Mark for joining us as well, and to you, the audience, for joining us on the conversation this morning. Mark, thank you to yourself and the team at the Scottish Tourism Alliance for facilitating and organising this event today. I hope that you've all enjoyed the discussion, and I look forward to meeting you all in the near future. Thank you all very much indeed.
Thank you, Robert.
Thank you.
Thank you.
Thank you.
Take care.
Bye now.